Congratulations! You found the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for market week ending Thursday, April 2nd, 2015. Market breadth. With this past week's market fractional decline, our bull-bear point and figure ratio rose from 0.95 to 1.02, rising back into bullish territory. The total count of securities in bullish or bearish patterns rose 1% to 2,758. The count of bearish stocks decreased 3%, while the count of stocks in bullish patterns increased 5%. The Pirls PNF Market Breadth Summary Chart shows us a market now 1 week in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 6 points for the 14th decline in 24 weeks. At a positive 102.18 points, it continues below all 9 tops above plus 100 and above all 5 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum, as we mentioned, was expected last week. At 4/1 close, the CCI 20 daily had 6 consecutive days below zero for a change to Woody's CCI downtrend. At minus 58.14, the CCI 20 is just outside the range for a valid zero-line reject short entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 37 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. At Friday, 3/27 close, the CCI 20 weekly dropped below plus 100, signaling an exit from the trade begun after the Friday 1/23 close long zero-line reject entry signal. The result of this trade simulation exiting at the Monday 3:30 open was a gain of 169.42 points on the Nasdaq Composite, or $1.99 per share of QQQ. Industry rotation the last 2 weeks. 3 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, S&P Retail has entered the top 5. Networkers have left the bottom 5. Gold and silver has left the top 5. Bearish, computer hardware and comp tech have entered the bottom 5. Disk drives and semis continue in the bottom 5. Oil and oil services continue in the top 5. REITs has left the top 5. Focus this week. If anyone doubts that we are in a stock market bubble, show them this article by Michael Snyder on April 1st, 2015. Some excerpts from the article, including some charts, follow. From Doug Short, a chart that shows that the ratio of corporate equities to GDP is the second highest that it has been since 1950. The only other time it has been higher was just before the dot-com bubble burst. This next chart comes from Phoenix Capital Research. The CAPE ratio is considered to be an extremely accurate measure of the true value of stocks. This next chart I want to share with you shows how the Nasdaq has performed over the past decade. Looking at this chart alone, you would think that the U.S. economy must have been absolutely roaring since the end of the last recession. But what is really going on is rampant speculation. Some of the tech companies that make up the Nasdaq are not making any profits at all, and yet they are supposedly worth billions of dollars. If you cannot see a bubble in this chart, you need to get your vision checked. And this kind of irrational euphoria is not just happening in the United States. Right now, we are in the calm before the storm. We are right at the door of the next great financial crisis, and most of the people that work in the industry know this. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have had a pleasant and peaceful holiday weekend, that you're looking forward to a great week coming up, and wishing you true success.